Let's talk about the Schedule E. So we are in the federal section under the income, and we're going to drop down to our Schedule E, rents and royalties. Jumping in here, it says check here if you've made any payments in 2016 that would require you to file Form 1099. Yes or no? It's either a yes or no question. Did you file 1099s and make the payments or no? So we're going to click continue here. Not worried about that. And we're going to get into our rent and royalty. We're going to, in this scenario, talk about a single family residence, and the description of property is going to be First Street, and it would help if I could type. There we go. And the address is First Street and 33016. Oops. Oh well, that's fine. And what was your percent of ownership? It was 1,000 or 100%. What is your rental payments? How much did we receive for the year? We'll say $8,000. Did you have any refunds, returns, or allowances? Nope. Enter the number of days that the property was rented at fair market the entire year. Did you guys use it as personal use at all? No. Check here if it's a joint venture. If you actively participated, I did. We get a lot of calls about this for the losses on a property not carrying forward, and this seems to be the most common thing is, hey, I bought this property in this current year, had to put a ton of money into it, I actively participated, but the loss for the property isn't carrying over to the 1040 like it should. What's up? Come in here, we check the box that says they actively participated, and there, bam, it pops up. So again, if you actively participated, there's rules defining that, what that means, as opposed to passively. Go ahead and check that if you have a loss and it will carry over. Going to continue on. Now we get into our depreciation section. So there's depreciation rules around a uh, residential rental property, around a house. And so we're going to put our First Street in, and the date it was placed in service. We'll just say that it was at the top of the year. I should stop clicking so many times and go back to using my mouse, or sorry, my keyboard. $250,000 was our purchase price, 100% business use, and no prior year, no accumulated. Depreciation method is this 27 and a half years. It's just the way that it is with a rental property, and we'll call that good. Click continue, and I guess I screwed up. We'll call it 28. Cool. If you had more than just that property, go ahead and click add another and rock and roll. Did you have any other expenses related to this property? Well, yeah, we did. We advertised it to put it out there. We had to clean it. We had insurance. Absolutely, you have insurance. If you don't, that's bad. No legal fees. We didn't pay any We managed it ourselves, which is why we were actively involved. Um, we had mortgage interest of 1,500, and so on and so forth. Cool. Click continue. Car and truck expenses. Did you have any car and truck expense? We absolutely did. Actual expense was, oops, what am I doing? Standard mileage, sorry. And it was an F-150 truck. Again, top of the year. And we, 5,000 miles. It's a long ways from our home. And check here if you had this. Check here if the vehicle was used by more than 5% owner-related person. Yeah, you can argue that one. And check here if another vehicle is available. Cool. Click continue. Oh, cool. And we're moving on. So that is our Schedule E for a single family residential rental property. Again, the purpose of these videos is not to go into the detail of each form and its specifics, but just to give you a high-level overview of the flow, the field, the function, and just really to act as an introduction to those items. So hopefully we accomplished that. Thank you so much, and let's have a great tax season.